We have assembled 100 private sector innovators who are leveraging cutting-edge technology to create new possibilities in the payments landscape. Our panelists are engaging in integrating traditional financial payment rails with distributed ledgers, developing new products and services in the digital asset ecosystem, and leveraging AI in the payment system. It's worth noting that the firms engaged in these activities include banks, asset managers, retail payment firms, technology companies, as well as crypto-native fintechs. This is an acknowledgement that distributed ledgers and crypto assets are no longer on the fringes, but are increasingly woven into the fabric of the payment and financial system.
That experimentation phase of blockchain has stopped from banks, from institutions, from central banks. They've been experimenting. You know, they understand the capability. They know what use cases are possible, but they also understand the value of blockchain, because what they're implementing is a new infrastructure.
Alrighty, everybody, what is going on? Welcome back to another CYPRX video breakdown. That gentleman that you all are just listening to here is a Fed speaker, member of the Federal Reserve, Christopher Waller, going on to tell you guys that cryptocurrency is being finally integrated and woven into the financial ecosystem. That is huge confirmation, considering the environment and the landscape in which we're operating in. So in today's video breakdown, I'm going to show you guys that now is not the time to be fearful, and that literally all major financial institutions across the board are well aware of the opportunity that exists in the crypto ecosystem now. And so as a retail investor, it would behoove us not to be emotionally attached to our investments in the now as we go through the trials and tribulations and the fluctuations and the volatility of these markets as it matures. Buckle down, hodl, and while we're hodling, earn passive income and continue to stack our bags, because what is coming, I do not believe a lot of people are prepared for mentally. There is going to be trillions of dollars that floods into this market over the next consecutive couple of years, and you do not want to miss out on the great wealth transformation because you are making irrational and emotional based decisions. As we all know, especially if you've been an investor in digital assets over the past consecutive couple of weeks, you know that the market has shed almost over $1 trillion in value. From the October high down to the October lows, the market has shed over $969 billion, which is a substantial amount of money and a very deep retracement. And the pain might not be over, considering the fundamental developments and the ongoings in the fundamental landscape that may continue to unfold as we progress into 2026. So be prepared for that. But understand the intraday fundamentals, meaning the things that affect the market day to day, might temporarily be risk off and creating more demand for safe haven assets. But if we zoom out, the underlying fundamentals and the infrastructure in crypto is continuing to be built out. And I'm going to show you guys, as of recent, the things that have been being said and the reports that are being put out to back exactly what it is that I'm saying, that crypto has never been more bullish than this before, ever in the entire history of crypto. So as you guys can see right here, this is the Crypto Fear and Greed Index. And right now we are sitting at a 29 out of 100. Down here, you can see extreme fear hovers at around 15. Extreme greed hovers at around 88. So we are well around extreme fear territory. That, to say the least, is the farthest away from the perspective of these institutions. These institutions are not fearful right now. As you heard, Governor Christopher Waller mention that crypto is being woven into the financial industry. Listen here to him at the opening conference of this new innovation summit that the Federal Reserve hosted just a few days ago, the Payments Innovation Conference, October 21st, 2025. Listen to how he opens up the technology conference. He mentions embracing these new technologies. Take a second here and listen.
All right. Well, thank you, Susan, and good morning to everyone. It's my pleasure to welcome you to the Federal Reserve Board for our first Payments Innovation Conference. My objective in creating this conference is twofold. First, I wanted to have a conference that focused on the new technologies that had come from the DeFi and crypto worlds and how they are entering into the mainstream payments ecosystem. My goal is to have a vibrant discussion about payments between traditional payment incumbents and the new entrants from the DeFi world. Second, I wanted to send a message that this is a new era for the Federal Reserve in payments. The DeFi industry is not viewed with suspicion or scorn. Rather, today, you are welcome to the conversation on the future of payments in the United States and on our home field, something that would have been unimaginable a few years ago. My view for the Fed from now on is embrace the disruption. Don't avoid it.
So, in the midst of the market turmoil, again, sitting in front of all these bankers, I'm assuming that there's probably representatives from high-end central banks here. There's financial entities, there's regulators in this room. While the crypto fear and greed index is sitting at a 29 out of 100, and while the market and everybody else is fearful, thinking that we're entering into some bear market cycle because we shed a few $1 billion off the total top of the market cap, right? You have the Federal Reserve saying, look, get involved. This should not be looked at with scorn. He just specifically said DeFi should not be looked at with scorn. It should be looked at and embraced. Huge confirmation and a video breakdown, considering like this was put out like what? Let's go back and look. Okay. This video in particular. And again, this video surprisingly has a lot more views than these videos usually do. But still, in comparison to the general population in America, this is from the Federal Reserve's YouTube and still only has 48,000 views. You could go find some TikTok streamer right now that's doing some stupid dance on the internet that has millions of views. So the vast majority of the population has no idea that this payment innovation conference even exists. So they're being distracted, but not you, not if you're watching CYPRX. So let's continue, because what Fed Waller specifically said coexists with what the IMF director said at a Future of Finance conference just 7 days ago. So again, I'm showing you all that all of this information is coming out coincidentally in the midst of one of the largest liquidation events in crypto history. When the crypto fear and greed index is at a 29, start to get the brain juices flowing. Why do you think all of this is? It is not, in my personal opinion, coincidental, and it all happens for a reason. So take a second and listen to the IMF director say the exact same thing.
Through those answers carefully.
But generally, you tell them to embrace it?
I'm telling countries, accept reality. Fiat money is moving digital. The developments in crypto, both unbacked and backed, they're happening with exponential speed. So yeah, you can try to lock your country away from this. Good luck with it. So yes, I'm telling my members, understand it and then decide for yourself how you're going to operate in this world. But do not close your eyes to reality.
What a key takeaway from the IMF Future of Finance conference. I'm telling countries to embrace the technology. If you ignore it, she laughed. Good luck. Do not close your eyes to this new technology. This is massive confirmation. Smash that thumbs up button and subscribe, especially if you've been following CYPRX for some time, paying attention to the good research that we put out, trying to just show you guys to keep a level head in this volatile market. Where we are headed is nowhere near compared to where we are today. Trillions of dollars will flood into this space, especially after the fundamental headwinds are behind us that are weighing on risk sentiment. Let me continue to show you guys that the largest organizations in the game are putting out reports that most people will not read, but here at CYPRX, we focus in on, so that way we can really lock in and show you guys that the future of finance is not only digital, but involves cryptocurrency adoption at scale. So we're going to jump over here. This is from Blocknomi. And it talks about this Citibank targeting 2026 for crypto custody launching amid blockchain push. So let's just read thoroughly through this. Mind you, again, all these fundamentals that I'm showing you guys have come out in October amidst one of the biggest liquidation events and pullbacks in crypto history. So if we come here, it says, Citi is gearing up to launch its first crypto custody service in 2026. The decision follows a more supportive U.S. regulatory environment and renewed investor interest in digital currencies. Bishwarup Jitrai, I'm probably butchering that gentleman's name, Citi's global head of partnership and innovation, confirmed that the bank is preparing a dedicated custody solution for cryptocurrencies. He said the development has been ongoing for 2 to 3 years. So this shows that they have been building for this infrastructure and is now entering its final stages. What? Okay. In the midst of, again, when everybody else is fearful, they're entering their final stage to launch digital asset custody solutions. Think about that, right? The service will allow Citi to hold native digital assets, including cryptocurrencies such as Bitcoin and Ether, on behalf of institutional clients. Citi plans to build core technologies in-house while partnering with specialized third-party providers for specific features. This dual model will give the bank flexibility in handling different types of digital assets and compliance requirements. Citi's entry into crypto custody comes at a time when financial institutions are experimenting, I highlighted that in red for a reason, with blockchain-based tools. The bank already operates Citi Token Services, which enables tokenized money transfers across borders. Now, I highlighted that word in red, experimenting, because here on a panel discussion recently, we had Gilbert Verdian, the CEO of Quant, go on to say this.
Prove the infrastructure is fit for purpose. It's capable for transacting value. It's capable for institution grade adoption. And the work that we did was around netting, settlement between banks and doing that on blockchain as a potential stablecoin. So, we've done a lot of work in that space since 5 years ago. And what we're seeing is that experimentation phase of blockchain has stopped from banks, from institutions, from central banks. They've been experimenting. They understand the capability. They know what use cases are possible, but they also understand the value of blockchain, because what they're implementing is a new infrastructure. And this.
So I'll leave it there. We don't even need to watch any further. He just confirmed that banks are not experimenting anymore. They're getting prepared to launch. They're done testing. They've been doing this for years. He mentioned 5 years they've been doing this, right? They're done testing. They're getting ready to launch, and they know that they have been revamping the financial infrastructure. Again, major confirmation, considering that this interview came out just a few days ago in October amidst all of the market turmoil. And now showing you guys the actual Citi report. Shout out to the CYPRX researchers, always showing you guys the devil's in the details. This is that Citi report that Blockonomy is talking about. So we pulled that up for you guys to show you all that this is happening. You can take a look at the report yourself. This is a report from September 2025 from Citi, the future of post-trade custody and settlement in an always-on world. And right here, it goes on to say, the 2026 digital asset custody market represents a strategic, that is a very important word, strategic, remember that, inflection point for traditional banking institutions, where tier one banks are poised to enter the digital asset custody market with a strategic, that's the second time they've mentioned that word, and a measured approach. The competitive landscape will be characterized by a nuanced client segmentation strategy focusing primarily on large cap crypto assets. The banks will target a substantial market segment seeking basic crypto exposure, trusted institutional partnership, and low-risk investment strategies. Massive confirmation. And this came out right before one of the biggest pullbacks in liquidation events in crypto history. Again, I don't think that it's coincidence, but you all can believe what it is you want. I know that the banks, if they're going to buy something, like to buy it at a discount. And so it would have made so much sense for them to drop the market right before they get involved in 2026, right? Interesting to say the least. Moving on over here, remembering and keeping in mind that word strategic that you guys just saw directly in a Citi document. This was announced via Chainlink and S&P Global, and this is from October 14th, 2025. So yet another infrastructure layer fundamental that shows you guys that crypto is more bullish than ever before and that institutions are preparing to get in at a very large scale. This reads, the S&P Global today announced a collaboration between the S&P Global Ratings, the world leading provider of credit ratings, benchmarks, and analytics. And as we're reading through this, remember that word strategic from the Citi document, right? A Chainlink, an industry standard Oracle platform bridging the capital markets on chain to deliver S&P Global Ratings Stablecoin Stability Assessments, or SSAS, on chain via data link, an institutional grade data publishing service powered by the Chainlink standard. The initiative makes an S&P Global Rating deep independent stablecoin risk analysis directly accessible within decentralized finance or DeFi protocols and smart contracts for the first time ever. As institutional adoption of digital assets accelerates, the ability to access real time risk management directly within blockchain infrastructure has become crucial for market participants. The collaboration enables DeFi protocols, lending platforms, and institutional investors to incorporate S&P Global Ratings' robust analytic risk assessment directly into their automated decision making process. The launch of SSAS on-chain through Chainlink underscores our commitment to meeting our clients where they are, said Chuck Mounts, Chief DeFi Officer at S&P Global, making our SSA available on-chain through Chainlink's proven Oracle infrastructure, re-enabling market participants to access our assessments seamlessly using their existing DeFi infrastructure, enhancing transparency and informed decision-making across the DeFi landscape. Last but not least, down here, it mentions the signing of the Genius Act into law on July 18, 2025, establishes the first federal regulatory framework for stablecoins in the United States, providing clarity for institutional participants. The availability of the S&P Global Ratings, or SSA, on-chain further supports market participants as they develop and adopt easy-to-use DeFi solutions that meet the high-risk management standards that regulated institutions require to move capital on-chain at scale. Now, here it specifically talks about how they're developing and adopting easy to use DeFi solutions. What does that mean? Remember, I told you guys to remember that word, strategy. These large organizations are 110% building strategies to get into the digital asset ecosystem. And if we come over here, that is confirmed via a State Street release article from October 9th, 2025. So I told you guys to remember that word strategy. Well, take a look at this. This is directly from State Street. Who is State Street? Well, if you come down here, it says they are one of the world's leading providers of financial services to institutional investors, including investment servicing, investment management, and investing research and trading. With $49 trillion in assets under custody and or administration, and $5.1 trillion in assets under management as of June 30th, 2025. State Street operates globally in more than 100 geographic markets and employs over 52,000 people worldwide. That's who they are. And look at what they're saying. We'll wrap it up here for the day. If you guys have enjoyed this so far, smash that thumbs up button and subscribe, showing you guys that now is not the time to be fearful, that in the midst of one of the biggest liquidation events and down months in crypto history, we have seen all these organizations and institutions, including the Federal Reserve, the IMF, Citi, and now State Street, put out all this information. I don't think it's a coincidence. It's inverse psychology. Retail is scared. Institutions are preparing to launch. Massive confirmation. Majority of institutional investors, this reads, it says, expect their digital asset exposure to double within 3 years, with over half anticipating 10 to 24% of investments to be tokenized by 2030. The acceleration and adoption of emerging technologies is remarkable. Institutional investors are moving beyond experimentation. Do you see how all my fundamentals coexist with each other? That's because I'm showing you guys real information. We had freaking the Citi report say, we're done experimenting. We had freaking Quant CEO say, we're done experimenting. Now you got State Street saying, we're done experimenting, right? And digital assets are now a strategic, there's that word, lever for growth. They are a strategic lever for growth, efficiency, and innovation, said Georgi Ambrosi, president of investment services at State Street. Institutional investors are signaling a decisive shift in how they approach digital assets. Nearly 60% plan to increase their allocation in the coming year. Confidence in digital assets as a long-term investment strategy is growing. That is huge, keeping in mind a long-term perspective, right? We are seeing clients rewire their operating models around digital assets, said Dinad Milrod, Chief Product Officer at State Street. Many are building dedicated teams, and nearly 1 in 5 plan to follow suit, from tokenized bonds and equities to on-chain wrappers, central bank digital currencies, stablecoins, and tokenized cash. The shift isn't technical, it's strategic. Wow, what a statement. And last but not least, you guys and gals, as always, smash that thumbs up button and subscribe. Hopefully you all enjoyed today's video breakdown. I enjoy making these types of videos for you guys, and I know that the CYPRX research team enjoys doing the research for you all to stay tapped in. If you guys want access to any of the research, any of the videos that we share on the CYPRX YouTube, so that way you guys have up-to-date, timely, institutional grade information, panel discussions from some of the largest organizations in the game that go relatively unnoticed, documents from some of the largest banks in the game that are never read or disclosed to the general public, even though they are made public, people just don't know where to find them. You guys can always find them inside the CYPRX or research Discord. Head over to cyprxtrading.com. We'd love to have you on the team. With that being said, many blessings to you all. Be cognizant, be aware out there, and I'll see you all in the next video breakdown.